Maurice Pomery. He gained more than 30 years of trading experience before founding the research and consultancy firm Strategic Alpha. Thanks so much for coming in. So where do you stand on this debate? Should they just be allowed to default, cut our losses and get out now, or are we underestimating just how messy a Greek default could be for the region?
Well, I think a Greek default is going to be messy, without doubt, but the alternative is possibly they leave the Union, and I think that would be a far greater mess to deal with for everybody concerned, right away across from America, across to the UK. So I think it's a matter of them deciding at some point, where do we stand on this, which is the easiest and most effective way of getting past this and drawing a line underneath it. And to us, we feel that there is a potential to draw a line in the sand underneath, or a line underneath this issue, if they actually allow the default to take place. The longer this goes on, I think the longer we're going to see erosion of confidence in the zone as a whole.
But speaking about the risk of Greece leaving the euro if it doesn't default, isn't that also a risk if it does default?
Well, no, I think what they'll do is they'll suggest that to keep it intact, that they'll allow the default to some degree, whether it's going to be the big default or a restructuring. Then they have to come out and support the banks that are exposed to that. So maybe Angela Merkel can go to the German public and say, well, I'm bailing out a German bank, I'm not bailing out Greece. So there's an opportunity here, and what worries me about this is the rhetoric's picking up about Greece defaulting. Geithner's turning up at the European finance ministers' meeting on this Friday. Pretty unprecedented. So something's going on. There's a lot of rhetoric from senior central bankers around the world. Maybe a coordinated move to try and clear up, mop up the situation afterwards.
All right. So if Greece does indeed default, what about the risks after that? I'm thinking about not just the economic losses for that country and further contraction, but also for the rest of the region. We keep speaking about contagion. This is where we could really feel the full weight of it.
I mean, this is why it's taken them so long to get to this stage, and I think the can kicking has probably come, run out of road almost. So I think the danger here is that they've run out of alternatives. Yes, the contagion is going to be there. Yes, borrowing costs are going to go up in Italy and Spain, and there is going to be hardship for many, many years for the peripherals. But the problem is this is all getting rather too close to the core now. So maybe in a coordinated effort to keep borrowing costs down, we may even see a global G20 coordination to intervene on a European QE, if you like. The ECB doesn't want to do it, but could America help out? It certainly is a mandate at the Fed to do so, but it's very unpopular.
I mean, the problem is, I suppose, that when we speak about the issue of coordination, I mean, already divisions, deep divisions in Europe about the way forward, and that's just in this region where the crisis is really playing out. Forget about involving other countries.
Sure, but what's the alternative? I mean, they have to get this sorted out at some point. They can't keep buying time. This has been a very costly purchase, this time that they bought, and it's getting worse, and we're not seeing any real improvements anywhere. Borrowing costs in Italy are unsustainable. They might even get quite a lot worse with the issue in Greece. The only alternative to a default in Greece is to throw it out, and I think the implications of that are greater than if they actually try and deal with this now.
How difficult would it be, though, to manage a default, to keep it controlled and ring-fenced, if you like, and stop it from really spreading and, well, for example, let's just take one thing, the cost to the banks.
Yeah. Well, the cost to the banks is going to be quite substantial. I think they've spent this time that they've bought by looking into that. The IMF made an interesting statement saying that a lot of the banks can survive this if Greece is ring-fenced. Again, the alternatives...
That's a big if.
It is a big if, but again, it comes down to the alternatives. Throwing Greece out is a much bigger risk to banks and the whole of the European Union than anything else out there. So maybe a default is the lesser of two evils.
But if you did, wouldn't it be easier to ring-fence Greece, so to speak, to ring-fence those risks and limit those losses if it was?
No, I disagree. I think if they're thrown out, then I think the whole structure and the cracks in Europe widen massively. And I think the loss of faith in the Union to hold on to itself is just too great. And I think we really will see some massive equity swings if we see that happen as well. Whereas if we can get through this and there is support from G20 on the back of this, and possibly people like China, who probably might get involved if everybody else does, then we might be able to draw a line under this. I'm still very bearish of the euro, but we took some profits yesterday because we feel that there's something going on, and we'll just move to the sidelines briefly, see what happens over this weekend, see what Geithner has to say.
You're getting the feeling that there is something going on behind the scenes. I mean, actually something meaningful this time. Do you think France and Germany and possibly the US could surprise us all in a good way?
I think there's a possibility of that, and I think that the market is desperate for some good news. I think we've had a lot of bad news out there. Everybody knows the euro should probably be at 110. It's not. We've had some help there. We've bought some time. But a run on the currency is also not going to help them.
You said that you're bearish on the euro, so I mean it has shown remarkable resilience as the crisis has escalated the past few months, the past year perhaps. How low could we go?
Well, we actually are looking for the sort of more of a relative value price at around 120. But again, if we get something solid come out on a coordinated basis, then obviously I think we might go back up again. But we've literally moved to the sidelines, but we do remain with a bearish bias for sure. We have some real concerns that the risks out there are still huge.
There you go. Thanks very much. Good to get your thoughts. Maurice Pomery, currency specialist and CEO of Strategic Alpha.